Hello traders, good afternoon. Today is Tuesday, the 21st of July 2015. This is a FreeFX video, and today we're going to discuss something quite interesting because all traders at the moment are interested in is one of two things: either the resolution to the Greek crisis or returns. It is the summer, and summer months are generally lower in volatility or rather high in volatility, lower in liquidity. So there is likely to be more random movement, but also a lack of momentum. The other issue, which is regarding the euro crisis, has been on the mind of a lot of people, not just traders, but obviously Greek citizens and European citizens on the whole, but also people who are involved with financial sectors worldwide, including us retail traders. The one thing I'd like to say is that the Greek situation has not obviously taken the quick progress that many people had hoped for, and we have therefore this situation where there isn't a clear path for people to trade. And if we looked at risk trends, we have here something that John Kicklighter, the chief strategist of dailyfx.com, talks about often, which is the S&P 500 index. I have actually overlaid it with the UK or FTSE 100 index. You can see that on the daily chart, the final segment of both has been a slight tendency to recover some of the losses, but overall they haven't really made new highs, and it seems that there is a lack of conviction in this move, as though the equity investors haven't really, or speculators haven't really taken long-term positioning anymore than short-term traders. So I would probably look at this without necessarily making an immediate call for a wholesale reversal from a 6-year bull trend in the S&P 500 to new lows or historic corrections. But certainly all eyes at the moment are away from Greece, because the situation has not really taken a clear path, and perhaps focus is away to new potential dangers to the stability of markets and returns on buy and hold investors. I would move away from this to get into more detail regarding actual currency trading, which is what we're here for ultimately, and take a look at the European markets. This is the Euro USD. And you can see that on the daily chart, we haven't really made much progress. Some people actually called the move to parity, and we got close with 105 on the Euro USD, but that didn't really take us to parity as promised. Because after this massive move from the 140 down to 105, that's 3,500 pips. So at this point, we've kind of made a small recovery, but it's sort of made a wedge and not actually further highs. Equally overlaid, you see the euro pound, and this also has moved in a similar way, and it hasn't, the blue line here hasn't really made much progress either to conviction to the downside or recovering to the upside. It's sort of lingering on, continuing this bear trend, probably further than the Euro USD because of the pound expectations for yield and movement. Some of you will know that last week the Bank of England governor, the former Canada Bank governor Marcani, has made a speech in Lincoln Cathedral in England, and he spoke of rate hikes in the next 2 years for the bank, and said that it is to be expected. Therefore, there is something in that. On Wednesday, that is tomorrow, there'll be the release of the Bank of England meeting, or the Monetary Policy Committee minutes. So that will possibly shed some light into how many members again have voted for or against a hold of the rate as we are, or for a change in that. We had at some point in the last year and a half correction of that 9 votes to 0, that is 9 for keeping the rates unchanged, and 2 2. So 9 to 0 changed to 7 and 2, but that was only on one occasion. Now, tomorrow is actually not so much about the pound, although this could have an influence on the movement for the pound, as you can see on this chart, which has been recovering its losses since the earlier part of the year and gone up to from 145, as you can see, to 159. So it has made a strong bid, but obviously we don't actually know what is happening for the immediate term. We know that medium to long term, the Bank of England, like the Fed, the federal bank, will probably raise rates when it sees fit. And there is a rhetoric there, just like with Yellen last week at her meeting with the House of Representatives, and then the following day with the Senate, the U.S. Senate. There was an intimation in her words that there would definitely be a lift, and this would obviously happen soon. And the 2 rate hikes that the Fed is proposing this year would probably be instigated at the first quarterly update meeting in September. So we don't have long to go, and the markets are pushing the dollar a little bit higher because of this, although you can see that it's still a slightly anemic push. It still hasn't made its recovery from the drop here in March. So it's still waiting for that final conviction and clear, strong signal from the Fed, and the Bank of England equally has not quite made a strong push. We can see that there is a beginning of a trend with higher highs and higher lows, but it's still quite weak, and the movement per day is not very strong. So we are slowly pushing ahead. We've not had any gaps to the upside, and there have not been many groundbreaking news from that point of view. So we know that this is possibly not something that we can rely on in terms of taking this bid for a cable move. And equally, if we had something in other pound pairs like the pound Kiwi, that could give us an indication of a strong move to the upside, then we could take that signal. And we know from looking at this long term, this is a day chart, we had this head and shoulders pattern, inverse head and shoulders, broken, and so this level at 209 or 210 was broken, and we came up here from May all the way up to an incredible run. Actually, it's been nearly 4,000 pips from here to there. And it seems at the moment that we have hit a rather remarkable round number, 2.40 or 2.4. This seems to be a very strong possible supply level, or needing some conviction. As you can see, this level was previously a demand level for quite a big reversal back here in 2005 and then in 2008. So we've had it function as a demand level for big movement to the upside. Now it's a reverse. Where will this go? Well, this actually depends more on the Kiwi, which is what I'm going to talk about next. So we have had a look at the risk trends at the moment, which is slightly anemic, and usually the Kiwi pairs respond to many themes, and one is risk pairs and possibly commodities, and then obviously we have dairy prices, and we have a Chinese market. There are many themes which belong specifically to the Kiwi and the Australian dollar, but really we have one event risk which is coming up on Wednesday, that is tomorrow evening in European time. That will be 11 o'clock. Sorry, in British time that will be +1 Central European time. So we have actually 10 o'clock event. Now, this, if you do plan to trade for this, as you might be, you're probably aware that a lot of the economists have actually banked in a rate cut, one of 2 this year, from the Royal Bank of New Zealand, which in a sense this is something that has been already priced in, but it doesn't discount that the price movements will reflect, if there were indeed a confirmation that the expectation were met by the Governor Wheeler of the bank, then this is not to say that the Kiwi wouldn't continue its run to the downside on the Kiwi dollar or on the Kiwi yen, as you can see here on the 4-hour chart, or on the pound Kiwi and the Kiwi dollar as well. So we have a potential for continued gains for the pound Kiwi, or for continued losses for the Kiwi yen, Kiwi dollar, and so on and so forth. Relative to positioning, we have obviously much more potential running on the pound Kiwi, because you can see that we are at the bottom of a very long downtrend here, and so we are making a recovery of this move down, and that perhaps if we looked at other Kiwi pairs, we may want to think, what is the best pair to invest in the long term? Well, the Kiwi yen is, in the opposite sense, to the downside, a very strong mover, because we have really come a long way from this 2008 low, and we certainly have a lot of potential to the downside. You can see how the risk trends affect the Kiwi yen as a carry trade, and also with the Kiwi being sensitive to the risk theme. And we have here the FTSE 100 chart also overlaid, and they are moving quite closely together. And so this drop we've seen recently has actually been almost a copycat for both assets. I would like to finish by saying that in the event of a rate hold, which would obviously be not a rate hike, but it would certainly be against the expected outcome, against the expected results from the market, we might see the Kiwi rally. And why is that? Well, if we had, for example, Kiwi dollar move to the upside, we could actually say that this was so because the Kiwi dollar has come a long way from former highs, and really this run has truly been of a rather enormous magnitude, from these levels at 0.90 to 0.65. Okay. Now, there are sort of further losses to recover. So we're about 50% between this 2009 low and this 2011 high, repeated here 2014. Obviously, we tested this high twice in 5 years, and it's been rejected. So a big supply move to the downside, with the Royal Bank of New Zealand's former status as the best yielding bank for both interest rate rise expectations and its higher yield compared to other GA currencies. These expectations have obviously since been washed away, and the market has taken notice, and this is the result. But we have come here to this possible, we could say, demand level from 2010, although I doubt that it's necessarily something that's still being held up by orders, but maybe there are demand orders and stops here. So this has the potential. Nothing moves in a straight line. As you can see here, there has been demand level of around 0.72. So there may be a temporary relief bounce, but then it's all about the expectation in the upcoming months. So it's not so much about what the Royal Bank of New Zealand governor says tomorrow or does tomorrow. It's about what will happen to the end of the year, because we're expecting, remember, we're expecting 2, not 1 rate cut from the RBNZ in the forthcoming months. So if there were a rate hold tomorrow, but there were a hint of a rate cut later this year, I don't think that this would hold much hope to reverse. It may be a temporary relief, but ultimately there would be nothing to hold it from sliding further down. And this obviously would be reflected in other pairs, especially the pound Kiwi, with the pound being having a stronger bid for a rate hike in the near future. So think about relative positioning of different currencies if you're trading the Kiwi and the Kiwi event tomorrow, and keep your eyes open for significant moves in the market, as this is the highest risk event in the upcoming 48 hours. Good luck trading, and we'll see you out there in the next video. Thanks for listening.